welcome to another edition of Roadhouse Live. We are live today. It's December 14th, 2023. Man, oh man, Bender Stonks. Did you see them candles yesterday?
I didn't. I didn't see them until I was watching something last night. I had it like on the outdoor TV while we were working on stuff, and I saw I saw him talking about Dow new highs and Fed announcing no more hikes and 3 rate cuts next year and blah blah blah. And I'm like, yep, that figures. I was not here for it. And so now going back and looking at some of the charts and some of the candles, like, yeah, they put in
And
some
that,
work yesterday.
yeah, no, they most certainly did. Couple of items of note. Look, I think everybody right now is sitting here looking at this, going, "Wow, this is unbelievable. This is awesome. This is amazing." We've had a couple of ERs over the last few days that kind of point to weaker guidance that are being completely ignored. Adobe one, Oracle the other, on their reports. Adobe took a splash, but it didn't seem to bother the broader market or any of its contemporaries, if you will. It's just like, nope, that's somebody else's problem, not ours. We are in an environment to where the VIX has been beat down pretty good. The dollar took a pretty big tumble. Yields took a big tumble. Everything took a big tumble that was kind of inverse to whatever you want to look at the market being. And as we're coming into the day, I think a lot of people are praying for some type of a retrace to be able to play ball. And you have another grouping looking at it going, yeah, we're just getting started with this rip. So eh,
Hey,
it's like, so what do you say? What do you do? How do you approach the day with something like this and try to play around it? Um, Usually, Bender, after we've had a big move or a Fed day, we do get some type of retrace. They're able to come up with some type of a headline or something to be like, oh, not so fast. Um,
yep.
but we have Phantom Prints above. They printed a bunch of Q up at 406.35 ish, 406.50. That would be new all time high, I believe, over there for it to do that. We still have SPY lagging as far as the all-time high. Dow did its. If you want to look at Rusty is well off of its highs as far as potentially playing catch up. So maybe there's a trade somewhere within that narrative and world over there, and maybe Stonk will walk us through that chart over there to see if there's some lag to catch up, or if there's something different we need to be looking at. If you go through everything, it's like we had a little bit of news. Berkshire basically boosted stock in its position in Oxy. You had materials catching fire yesterday on the fact that with rates coming down, the odds are, and I put that in quotation marks, the odds are of growth, and stimulus and all that kind of everything moving in the right direction goes up substantially. It's like when I look at all of it, it's like I'm very, very thrilled that this is the result. I'm thrilled that the Fed is backing off, like extremely thrilled. I think that these 3 to 35 rate cuts next year, depending on who you talk to, I think people are way over their skis with that. But we'll see. We'll definitely see. It would certainly be counter to anything we've seen historically when it comes to presidential elections and election cycles. This would be something that we would not necessarily see. Um, so we have that. Outside of that, it's like, what else can you really say? If you take a step back in time, and I'll take about 2 minutes on this. Last time we were up in these levels was several years ago. Um, you know, and inflation was said to be transitory. This is where it's interesting. Because if the Fed does indeed pull back on rates without the economy dumping all over itself and hurting itself, and CPI does continue to retreat, you would have to say in some capacity that maybe this was just complete and total supply chain issue, and that in fact it was actually transitory. I, it's mind-boggling to me, Bender, when you go back and just like you look through the chart yesterday, yeah, like afterwards being like, yeah, oh wow, okay, neat. Hindsight's 2020, and depending on your time frame, it becomes even that much more daunting when you try to play hindsight. Now, in looking back at everything, it's like, how can you say that it wasn't somewhat transitory? And with the Fed, again, this is where it becomes so wild. Again, if the Fed is indeed going to lower rates, and that's what we're going to do, then that's also them at the same time acknowledging that, you know what, we went up way too fast for reasons that were not even necessary. I think no matter what angle you look at it, it's like you're left thinking, what the fuck is going on here? And how do I somehow end up getting caught up in this game constantly between the markets and the Fed and the government and the politics of it all and the messaging and the false prophets and everything? How does this continue to happen? I don't know. I don't know. But this is, if you go back several years, last time we were up and in these levels, it's like, what's changed? What's different? And I think something that maybe you can walk through with these charts and Stock can walk through these charts is what happens next. What happens next? So, Bender, you tell us what happens next.
Well, here's a weekly on the ES. And, we took out this 47.30.75, obviously. Right through the midpoint of that channel, there was a little kind of, these candles right in here. We'll zoom in and kind of show, but basically the candle that got us through that was that, massive candle yesterday. So now we're up and through it. Really, the next target that you'd look at here would be this 48.60.25. This candle's high from what is that, March 28th, 2022. That would be that next target. We talked about 5008 being the 1272 extension up here. Now, when you look at these weekly candles like this, and we go back and we look at other times that we've kind of put in weekly candles like this, right? 1, 2, 3, 4, 5, 6, 7. We're on our 7th green weekly candle. So let's just kind of zoom back, scroll back through the chart a little bit and look at kind of other times that we've put in, that sort of series of candles. And you're saying, well, there's people that are, looking for some sort of pullback or hoping for a pullback, right, to play ball. And, I would have to be in that boat as well, only because very rarely do we leave these massive fair value gaps behind on the weekly and not come back to kind of fill them in. I was going through the weekly candles, and there are certainly a few, like right in here, there's a volume imbalance that you can see we didn't come back for that.
Mm-mm.
I mean, I wouldn't consider this coming back for this, right? Because that was like a year before it retraced to that. So it certainly can leave some of this stuff behind. You can't look at this chart right here and, at least at the moment, see anything but bullish, right? To me, to my eye, it's like, and we've been talking about this, for a while, that the possibility existed, and Hells, you had it nailed as far as, what, as far as the rate decisions and what was likely to come out of some of this, and where it could push us. I think we've been talking about some of these levels above getting tested or taken out if things kind of continue to fall in line. But again, looking at the weekly, I would want to see some of these levels in here. I'd like to see us come back and take some of this out like we often do. I mean, even on this down move, right? You can see when we were putting in consecutive weekly down candles, it takes a couple weeks, but we do retrace back into them. And even during, QE on the way up, there were opportunities in here where there were pullbacks, right? So at some point, it's like, okay, take liquidity above, and then give us sort of back and fill retrace type. Now, where does it come in? Where does it happen? I don't know. You still got to look for that market structure shift. And when you're looking for pullbacks on like longer time frames like this, like on a weekly, it's like, okay, a 5-minute market structure shift isn't really what I'm looking for if I'm looking for a pullback, right? We need to see it on like a 4-hour or the daily, something like that. Let's go. I'm going to zoom in here to the daily. And really, there's not much different here. That same 48, 60, 25 hanging out right there. And you can see the massive candles that we've left behind here without any real pullback. We had some consolidation in here, but really no real pullback in here on the daily. So we're currently sitting 47, 87, 25. Maybe we pull back into this candle somewhere, 47.30s, something like that. At some point, we kind of get that retrace and retest of that breakout. Or maybe it doesn't happen until we clear this 48, 60, 25. Maybe they go take that first. Looking at the 60-minute, this would kind of be the area that if we establish, if it was to pull back under this and that becomes resistance, then that would kind of look like on the hourly, that would look like some of these levels.
And what's that mark there?
So the bottom of this fair value gap 40, that's right at 4,700, 4702.25. So if it's under 4,700 and that becomes resistance, then we can look at 4662.25, 4652. And then ultimately where all this stuff is stacked up, 4,600, maybe that's a headline. Maybe they give you some sort of headline, right? It may not happen until, we may be through December. Who knows? But at least for now, looking at the 60-minute, you can see everything else was, for the most part, filled in on the way up. Now we've got that massive candle left behind. If you get a pullback and this holds as support, right, and decides it dips down in here and then just heads north from there, then I think that 48, 60, 25 becomes the next target there. That's 70 points up from here. Yeah. Not a whole lot else. I mean, 15-minute, if we're looking at, kind of setting up the morning, your stops, and the first place to look for a reaction would be right there, 47, 67, 25.
Yeah. Yeah, I had that in that 47.50-ish area for whatever reason. Kept on, when I was lining things up, kept on screaming at me. Either way, it's like that could be next month by the time it does it.
Sure. Sure. Yep. Let's look at, I'm going to throw just right here, that 15-minute fair value gap. So, this morning, got to be watching if we do get a dip, Let's see what it does with this 47.78, kind of right in this candle. Ideally, if it's going to push higher today, ideally they would come take out some stops below first. This looks like relative equal lows right here too. Yeah. So 47.70 half, you can see these candles here. So you get relative equal lows right there. If it takes those out, it probably takes this out. And then see if you get that shorter time frame market structure shift. If it starts pushing down, those levels would be potential targets, depending on how it's moving. God, it's 12 points from 4,800. If it hits 4,800, let's see what it does with it. Let's see what kind of reaction we get. So 4,800 and 47.70, I think, are keys.
Yeah, that and I think the other thing, if you're not watching the ESA, kind of charting out these phantom prints on Q, that 406.50 level, so that it's still about 70, 80 cents above, and that would push us all-time highs. It's like you would imagine that's gonna happen. I don't know if they need to make a red candle first, or they're just going to open us up and zoot us and maybe use that as support. I don't. I think there's more. I have more questions than answers at this point as far as what's going on. The reality is you have a lot of people that were not in on this move, have not been in on this move, and you have panic buying and panic covering going on at the same time.
And that's the thing, right? If you continue to see flow pointing up, look for 4,800, and if flow continues to be leaning, heavily bullish, we may not get that significant pullback until taking out that 48.60 area. Let's see what they give us.
Yeah. All right, Stonks, what you got, buddy?
All right. Let's see. What do we have today? We'll do some news. What we got? Merck and Moderna delaying a deadly skin disease vaccine. Let's see what else. Is there anything else? Citibank likes Dell. They got a 90-day positive catalyst watch.
Stonks, what happened to your mic?
I don't know. Am I sounding?
It sounds like you're either doing the morning show on the toilet.
I always do that.
Or maybe try to get a little closer to the mic. It sounds like you're far away.
All right.
Or it's using like a laptop microphone and not your primary mic or something.
It is. I mean, that's always that
okay.
way. But yeah. All right.
Okay.
Well,
whatever. Is what it is. We can hear you. Keep going.
Okay. Let's see. What else? There's a lot of this stuff is just who went up and who went down. Yeah. All right. So let's do any interesting upgrades and downgrades. LYV Live Nation upgraded. Target 110. Dick upgraded. And that's a downgrade. Yes. Downgrade, but price target raised. Okay, I'll take it. Lululemon price target raised, and I think that's about it. This is nothing too exciting. So let's get into some charts here. I don't think we really need to talk about any smash days to the downside. So why don't we just get right into the indices? I mean, yeah, they're there, and we have alerts set on the possible downside smash days, but kind of similar. Why don't we start with the Russell? We had weekly fair value gap. This would be, if we can close above this level here, that would be very bullish. If we close above 1993.8, throwback here. There we go. Close above that, that would be a bullish signal. Then we'd be looking. These yellow boxes are daily gaps. Orange boxes are weekly. So we've got small daily fair value gaps that we're also closing above. And then this pink box is going to be a daily volume imbalance. there be a target. And then if we're playing stop out hunters, we've got some stops sitting up 2056.4. Similar to, been taking us through the weekly here on the ES. If we take a look, we mentioned also the Russell's way behind as everything else approaches all-time highs. So if we can maybe pop this trend line, got these stops. We've talked before about where to hunt for stops, and when it looks like this, it's not as clean that it's just going to be a ton of stops sitting in one area, as opposed to, like, say, this level here, where it was pretty obvious that there was a clean double bottom, this level here, a ton of stops right there, versus we see this creeping on up, this guy. It's a lot easier because there's just going to be less of them, so you can just run. It's just going to smash through it and be like, all right, where's there going to be more liquidity sitting? So we'll see if we can just kind of start steamrolling here. I think this is going to be where, if the big tax overbought, and it's like, this is where we're playing stock pickers markets. That's what Mel's been doing. She's on fire. Looking at things like the KRE we've been talking about, the XBI, little places where there's going to be, we could be looking for some explosive moves. So, and again, I'll just be focusing over here on the Russell, but this is looking like a massive breakout. Would love to see it close above this 1993.8, and then we'll be potentially hunting some more groups of stops. So we're just gonna see what we get. Going back a little bit here, pre-market, if we kind of zoom in, see what Fender's got going. Interesting. Fender was showing us a double bottom on the ES. Maybe they need to come back and take those guys out there on the 15-minute. And then there was potentially another kind of double bottom type thing where there'd be stops down at the bottom of that weekly gap that we looked at over there. Jump over to the NASDAQ. We'll do the March contract. I threw bids on here on the 4-hour, which appears to actually be in play. I used this low to this high because we don't really have too much else on the March contract. So looking above, we've got a little volume imbalance here below, and we've got potential, the first bid above, we're up against it now, where we are pausing 16902.5. We've got a little gap. There's all of this potentially with room down to that 16,647.50. We've got this little gap below and potentially some stops sitting here. But if we can get pushing to the upside based on the bids off that range, with some levels above to keep on watch, 17,207.25, and then we'll just kind of call those setups as we go. Maybe kind of working on a little flag here, like bolt kind of type thing. Looks like, if NASDAQ was going to play the seek and destroy stop out, then this candle did it right there. So, and then, if we're going to play seek and destroy upside, so if we do, we need to break through with this guy here. Very clean up there, 16,885. So if we can get up into this, that's going to be where we play the, what's it do when we get there? We're going to smash and continue, or we're going to have to pause with maybe that was just the objective, was to stop out the bears on this equal highs, and we take it from there. The other one, I think,
again, the other thing, Song, is we do have those Phantom prints sitting up above. So it's like, in principle, that theory makes sense. As far as that move to the upside, I can totally see it. It's there. It's a flag, right?
Yep. Yeah, maybe draw those. Thin line there. See, and so this, I guess, we call it maybe like a falling megaphone type thing, but still bullish pattern. We'll see what we get. And then we got Benjamin above. Good call. I think the other one that would be important to look at would be gold. Big breakout yesterday. The dollar is still pushing to the downside. So gold's here above. This is going to be important. I'm going to be watching this 2057.8, very similar to what we just looked at on the NASDAQ, but this is only 4 hours, so we've got these equal highs. So we want to see a smash through 2057.8 for some continuation there. Jump over to the weekly. This orange box again, weekly gaps are always, I always have those marked in orange, just as a reminder for myself. So here we had, this was a Sunday night climactic top and drop. And so basically, I think this area could still be worth watching because these candles bouncing around it were just kind of macro based on a Sunday night open and drop. So we can get up into that. I'm going to be watching potential upside target 2084.4 over here on gold. Take a look at crude as well. Crude is reversing here. We looked at this, here's the weekly, and we looked at this weekly trend line earlier in the week, which did happen to be the low. So that was a good spot for a bounce just based on the weekly chart. Jump over to the daily. We've got potential stop sitting here, so we can see what we do to get up into 71.96. Daily fair value gap fills 72.65, and then this weekly guy that got left behind. So we've got a couple upside targets that we can continue to push to the upside on crude, and the dollar continues for downside. And then if we reverse, start pushing back, left daily gap, yellow box, and then we potentially have stops still sitting down there at 67.64. Other than that, you're going to just kind of watch flow, see what's moving, and then we can do some levels on whichever individual tickers get action. That's all we got.
All right, very good. So look, it's like we have upside targets and downside targets. For me, if I could get like a perfect little bounce entry, if I'm looking on the NQ, I would like to see a run down into 16,780. I would love to see that, about 40 points down from here, to try to play snatch and grab there. If you look at SPY and you want to play relative equal lows as far as that pre-market action, we can come down into 472 flat, 471.50 and through there. That's it's about 15 handles down or so, give or take, with all well knowing that we have those phantoms sitting up there above 406 and all-time highs. I do expect to see some type of a green candle on the dollar. I do expect to see some type of green candle today on the VIX. I do expect to see those things. And the one thing that I'll leave you with it to keep in mind, if you start seeing the VIX moving up independently and the market's moving down, be aware. You start seeing the VIX moving up with the markets, be very fucking aware of that, because it's a matter of days, hours before you get that move to the downside. That's all I got, guys. Flow continues to be very, very bullish, but we are getting, little red candles coming into open. The last thing I'll leave you with, Apple has been a non-player so far pre-market and is slipping below all of its EMAs and starting to kind of slump over. So let's just be smart. Let's be wise. Let's let flow be the guide. It's done a tremendous job over the last several weeks of pointing the overall direction. Let's stay in tune to that. Let's not walk away with basically what told us point blank. Stonk, those 4700s on ES, on ES, on SPX, they were hitting those like just, they told us where we were going, right?
Truth. Yeah, we've been talking about
they told
tomorrow's
us where we were going. And even yesterday, Total pointed some flow further to the upside, short dated, thick cash. They told us where we were going to go. So if you're sitting there and just from a psychological standpoint, you're like, fuck, I missed this move. It's like, what the fuck? And you're wanting to revenge trade it down to the downside, be very careful and make sure you're doing it for the right reasons and you're seeing the right things. The market rarely moves the way you want it to, how you want it to, when you want it to. Rarely does that happen. Probably never. But you can't put yourself in a position to where you're angry about something and then trying to revenge trade something that you missed. Bender showed the chart. Damn near everything that's ever happened in the market has retraced in some capacity. The question is timing. The question is always the timing. So keep that in mind. We only have a couple of weeks left in the year. Just breathe, enjoy, smile, be happy. Do that. Don't let your thoughts dominate your trading. So that's all I got. Fender, Stonk, you have anything else?
I'm good.
All right, everybody.
No, nothing else.
All right, let's have a good day. We'll see you guys soon.
All right.